This is Domenic from SA Capital, and today we're going to be taking a look at the total crypto market cap excluding Bitcoin. So basically what this index is it's a chart of all of the coins combined besides Bitcoin, which roughly holds almost half of the entire crypto market cap. This is a good way to look at the altcoins. So as we can see, we have had a lot of consolidation the last month. When we hit our low, it has been straight consolidation since then. Since May 19th was our first low, May 23rd was another low, similar area, but since then we've been going completely sideways. So what we can see here on a lower time frame is that we do actually have a sort of pennant or triangle formation, or kind of just a rectangle formation. We could have this right here, which would be kind of a consolidation zone if we completely miss out of this. But cleaner, we could look at what we call a bearish pennant as of right now. And the reason why it would be considered a bearish pennant is because the price came from the bottom, from the top right here, and then started creating this formation. If we leave out this right here, we can see that it has respected these lines well, but we have been stuck within this for nearly a month now, and we are awaiting a break of either side, which at that point it will trigger a large sell-off or a large bull trend. And until we break out of this consolidation box, which we could put as right here between the 810 billion to the 920 billion, that is what we would call our consolidation box. And as we can see, we did actually see some consolidation over here as well in between this box. Not too much, but right when we broke out, we started a new trend, and that is kind of what many people are anticipating right now. And if you guys watched my first Bitcoin video, we can see that Bitcoin actually is already broken out of its sort of downtrend line. So we have these downtrend lines here. Just draw another one so you could see it a little bit clearer. And Bitcoin right now is actually trading kind of right here in comparison to where the altcoin market is trading. And we would like to see the exact same breakout that we saw on Bitcoin. So if we can hold this support here, which I will draw a few different support and resistances. We have a very large support right there. We have a very kind of a small support right there. And then right here, we did just hold another support. As we can see right here, we had a rejection right there. And if we pull up just a bit right here, we can see that this is what we called a resistance. We tried to hold over this a few times. Right here, we tried to hold. We held a little bit, that came back down, held again, came back down, held again, and then really came back down. And since then, it's actually been resistance. So until we could get a full break of that line right there, which is around the $890 billion mark, that right there is going to be what is holding us back for a strong revival back to close to our highs. And at that point, if we do get the break out of there, we would be targeting roughly the $1 trillion to $1.1 to $1.2 trillion mark. This is where we would expect the first mark to stop if the altcoin market can revive, come back up there. We could expect maybe a rejection here, or if we break above this, we could see some rejection within this zone. And then this would be the important zone. If we do get back up to that level, this would be the make it or break it for the altcoin market, and that includes everything besides Bitcoin. So this is about the 1.1 to 1.2 trillion. That is our overall target to hit. But first, we do need to break these two lines, these trend lines right here, this resistance zone of 890 billion and this 920 billion. So this right here is really the mark we need to be looking at. If we could see the price break over that, something similar to, I'd like to say this right here. If we could see something similar to this, if we break above this right here would likely trigger us to hit at least this and potentially even up to here. And this would be a strong revival on the total market cap, excluding Bitcoin, so mainly the altcoins. And at that point, we would be looking for a revival across the board, and it would be nice to see. But right now, unfortunately, we cannot make that conclusion yet. So we just have to have our eyes on this mark right here. This right here is roughly Let's see here. This is roughly about 8% from where we're at. If we can get an average revival of 8% on the altcoin market, we would be looking at a potential break, and at that point we would be considered not to be in a downtrend anymore based on this trend line right here, which we could have it right there. We can also have it right there, which if that is the trend line right here, we actually have already broken it, but we still need to break over this important circle right here, and at that point we would be seeing a revival minimum to here. If we could break this, and then we would see a revival to there. On the bearish side, what we have to keep our eyes on is the $800 billion mark. This is in confluence with the 0.236 Fibonacci retracement zone, and this right here would be our uptrend, and this would also be a large support of about 795 billion. If we break below both of these marks, we would be looking for potentially a drop similar to what we see right here. If we break below these, we would be at minimum touching where we would call our large support zone, which this large support zone comes in at 670 billion to roughly 680 billion. This right here is where we would be looking for our first bounce, and at that point it would be a bearish scenario, and if we break below this, then we will be not looking good for the future on the altcoin market cap. But before we wrap this up, let's take a look at the moving averages and kind of see what we're doing with those. In comparison to Bitcoin, these actually are a lot closer. Bitcoin is, these two moving averages are actually up here for Bitcoin. So Bitcoin's got a higher area to regain before it's above its moving averages. But as we can see here, the entire uptrend, the price was above at minimum this yellow moving average, and most of the time this orange and purple moving average. So as we can see, and then unfortunately between May 13th and May 21st, we did break below all of those, and right now we are actually struggling with the 58-hour, the 50 MA on the 8-hour chart. This is the purple line right here. We did get over it here, but we got rejected, and since then we haven't been able to regain. These two moving averages are also in confluence with this trend line and the 0.382. So this right here is the mark to break over, and at that point we would be considered a bullish trend, and we'd be looking for a minimum 5 to 15% revival. This right here would be about our 5%. This right here would be actually a 20% revival. So that'd be good across the board. But right now we can't make that conclusion yet. We do need to see that break. And one last thing we will look at is the RSIs here. As we can see, similar to Bitcoin, we actually are still in a downtrend on the stochastic, on the regular RSI, and I believe the stochastic is starting to revive. As we can see, we are making higher lows here, and if we get this bounce here, it is going to look great if we could push back above there, and at that point we would see a minimum 10 to 20% revival across the board. So I hope all of you guys enjoyed this video, and we'll be back at you next week with another analysis.